How to trade with the bulls and bears power indicators. In this video I will show you how to identify the strongest and most profitable trends to trade. As always, this video provides a clear, winning, step-by-step guide to how to successfully trade in the forex, stocks, commodities, or any financial markets and generate consistent profits. So, by the time you finish this video, you'll know exactly when to enter high probability trade using the bull's power and bear's power indicators. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Two groups of traders are constantly present on the market, one of which is selling an asset and is known as the bears, whilst the other group of trader buying an asset are known as the bulls. Hence, this is where the terms bearish or down market and bullish or up market come from. The balance of power between them is one of the important factors in determining the price dynamics of any financial instrument. Using the strength of bulls and bears power indicator, it is possible to identify in which direction the market is moving. What are the bull's power and bear's power indicators? It should immediately be said that this technical analysis tool consists of two parts. One is called bear's power and calculates the strength of the bears, and the other is called the bull's power indicator and calculates the strength of the bulls. It is advisable to use them combined together for double confirmation of trading signals. The bear's power indicator values are calculated by subtracting the current candlestick from the low price of the EMA value. The essence of this formula is to demonstrate the strength of the bears about the average price over a period of a given length. The low price is used in the formula because the bears push the quote down. Therefore, they determine the minimum prices. The bull's power indicator calculation is performed by subtracting the high price of the current candle from the EMA value. Thus, this formula demonstrates the strength of the bulls in relation to the price averaged over a given time interval by the EMA method. The formula uses high price, as the bulls push the quote up, based on which they determine the maximum prices. How to use the bull's power and bear's power indicators. Both the indicators are drawn in the windows below the chart and displayed as histograms, the length and position of which relative to the zero level of the columns indicates the relative strength of a particular group of traders. Thus, the longer the histogram column of the bear's power indicator. First, located in the positive zone, the weaker the bears. Second, located in the negative zone, the stronger the bears. Accordingly, the longer the histogram bar of the bull's power indicator. First, located above the zero level, the stronger the bulls. Second, located under the zero level, the weaker the bulls. The length of the histogram column, in turn, depends on the difference in price levels of the low and high of the current candle and the average price. Therefore, it is common to compare the lengths and column layouts of each indicator. For example, if the columns on both indicators have almost the same length and are located in the positive zone, this indicates a strong uptrend, or high and low prices of the current candle are much higher than the average price. Accordingly, when there are long columns in both negative indicators in the negative zone, this indicates a strong downward trend, since the current candle is completely below the average price. But if bull's power has a column in the positive zone and bear's power has a column in the negative zone, and the columns are almost the same length, this indicates lateral movement, since current candle low price below EMA and high price above EMA. It should be borne in mind that when installing a pair of indicators of the bull's and bear's power on the chart, it is necessary to set the same calculation periods for them, if you want them to analyze the same set of data. Bull's power and bear's power trading strategy. Developed by Dr. Alexander Elder in 1989 and introduced in his book Trading for a Living, the Elder-Ray indicator is comprised by three elements: bear power, bull power, and a 13-period exponential moving average. As the high price of any candle shows the maximum power of buyers and the low price of any candle shows the maximum power of sellers, Elder uses the 13-period EMA in order to present the average consensus of price value. Bull power shows whether buyers are capable of pushing prices above the average consensus of value. Bear power shows whether sellers are capable of pushing prices below the average consensus of value. Bull power is the result of subtracting the 13-period EMA from the high price of the day. Bear power is the result of subtracting the 13-period EMA from the low price of the day. According to Alexander Elder, bull power should remain positive in normal circumstances, while bear power should remain negative in normal circumstances. In case the bull power indicator enters into negative territory, this implies that sellers have overcome buyers and control the market. In case the bear power indicator enters into positive territory, this indicates that buyers have overcome sellers and control the market. A trader should not go long at times when the bear power indicator is positive, and you should not go short at times when the bull power indicator is negative. 13-period EMA's slope can be used in order to identify the direction of the major trend. According to Elder, there are 4 basic conditions required to go long or short with the use of the Elder-Ray method alone. Alexander Elder recommends using this method in combination with the triple screen method. In order to go long, first, the market is in a bull trend, as indicated by the 13-period EMA. Second, bear power is in negative territory, but increasing. Third, the most recent bull power top is higher than its prior top. Fourth, bear power is going up from a bullish divergence. The last 2 conditions are optional. In order to go short, first, the market is in a bear trend, as indicated by the 13-period EMA. Second, bull power is in positive territory, but falling. Third, the most recent bear power bottom is lower than its prior bottom. Fourth, bull power is falling from a bearish divergence. The last 2 conditions are optional. This should be simple enough. Or, in this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Here are other examples of the bulls and bears power trading, to fully understand this wonderful strategy, and to make the most out of it. Bull's power and bear's power indicators can be used well together. The core benefit of these technical indicators are that they can be used to identify the strength of trend. However, you may preempt the reversal of a trend quite early through divergence. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell and leave us a like to show your support. See you next time.